All right, good morning, everyone. It is Tuesday, August 24th, 2021, and this is the regular meeting of the California Fair Political Practices Commission. Ms. Linker, would you please call the roll?
Commissioner Baker?
Here.
Commissioner Cardenas?
I am here.
Commissioner Wilson?
Here.
Commissioner Wood?
Here.
Chair Matich?
Here. All right, we'll proceed with item number 1, public comment for items not on today's agenda. Do we have any public comment? Hearing and seeing none, we'll proceed to item number 2, approval of the July 2021 Commission hearing minutes. Do any commissioners have any edits or comments on our meeting minutes?
No, thank you, but I move to approve.
We have a motion. Do we have a second? Second. Ms. Linker?
Commissioner Baker?
Aye.
Commissioner Cardenas?
Yes.
Commissioner Wilson?
Aye.
Commissioner Wood?
Aye.
Chair Matich?
Aye.
The motion passes.
Moving right along to our enforcement consent calendar. These are items 3 through 5. I'm going to, I need to recuse myself from item number 4. Mr. Gaylord was a former client of the law firm I was a partner in before I took this appointment. And so for that matter, I'm going to ask Vice Chair Baker to preside over the Commission's deliberation and vote on that. Did other commissioners have any items from the consent calendar they wish to hold for separate consideration, though? Hearing and seeing none, let us proceed then with the consent calendar for items 3 and 5. Commissioners have any questions for our Assistant Enforcement Chief this morning, Mr. Burton? Welcome to the table. Commissioners, any questions or comments for Mr. Burton? Mr. Burton?
No, thank you. Move to approve items 3 and 5.
I can second.
All right. Any public comment on items 3 and 5? Hearing and seeing none, Ms. Linker, please call the roll.
Commissioner Baker?
Aye.
Commissioner Cardenas?
Yes.
Commissioner Wilson?
Aye.
Commissioner Wood?
Aye.
Chair Matich?
Aye.
The motion passes.
All right. I will leave it to you, Vice Chair Baker, for item 4.
Thank you. We'll see you shortly. I think they'll let me know when you've left the commission room. I'm sure has happened.
Chair Matich has
Yes.
left the room.
Thank you very much. Thank you. On item 4, any questions or comments for, is it Assistant Chief Burton?
Yes, Assistant Chief Christopher Burton. Thank you.
Good morning. It's nice to meet you virtually. Colleagues, any questions regarding item 4? I did have one myself, and it was just, I noticed this is from the 2016 election. Is this just a matter that maybe the complaint was filed later along the line, or was there any delay in the process? We're 5 years, almost 5 years down the road. And usually when there's that much time, I like to just ask a little bit about what were there any delays along the way that we should be aware of?
Thank you, Commissioner Baker. There were no significant delays out of the ordinary course in this case that delayed it. It's just, I think, the nature of balancing our workloads, and occasionally we do have some cases that do take a number of years to resolve, and this just happened to be one of them.
Good. Thank you for that. Any public comment on item number 4? Hearing and seeing none, and back to colleagues if there are any other questions. Otherwise, entertain a motion and a second.
I'll move it.
Thank you, Mr.
Second.
Cardenas. Second by Mr. Dotson. Ms. Linker, will you call the
Commissioner
roll?
Baker?
Aye.
Commissioner Cardenas?
Yes.
Commissioner Wilson?
Aye.
Commissioner Wood?
Aye.
The motion passes.
Thank you. That is item number 4. We've taken care of item number 5, and I believe we'll be calling Commissioner Matich, Chair Matich, back into the room. And thank you, Assistant Chief Burton. for being made available.
Thank you. Thank you.
Thank you, Vice Chair Baker. Appreciate it.
There was no gavel, so, you know, it was difficult, but thank you.
You did a great job, I'm sure. All right, let's go ahead and move to item 6. This is the first of our general items. This is our pre-notice discussion of proposed regulation 18424.3 on behested payment reporting, specifically donor-advised funds. And this morning, we have Senior Commission Counsel Karen Harrison to present. Good morning, Ms. Harrison.
Good morning. Good morning. I will be having a PowerPoint presentation as a part of this, so permit me to share my screen and get that set up.
Excellent, thank you.
All right. And everyone can see the PowerPoint presentation? Excellent. Very good. I had a 50-50 chance of getting that up and running. Good morning. Karen Harrison, Senior Counsel with the Legal Division. I'm here to present proposed regulation 18424.3 to address reporting requirements for a behested payment when the behested payment is made from a donor-advised fund. The proposed regulation is presented today for pre-notice discussion. Following the Commission's direction on this regulation, the proposed regulation will be presented for adoption at a subsequent Commission meeting. So without further ado, behested payment reporting when the payments are from a donor-advised fund. We'll have a brief overview. We discussed this at the last Commission meeting, but essentially Section 84224 of the Act requires an elected official or a Public Utilities Commission member to file a behested payment report when the payment is made at the behest of the official and the payment is made principally for charitable, legislative, or governmental purposes. These are filed when a single source makes payments that meet or exceed $5,000 in a calendar year. Section 84224 requires, among other things, the name of the payor and the address, and that's what is significant and we'll be looking at today in the context of a DAF payment, a donor-advised fund payment. To review on donor-advised funds, at the July Commission meeting, the Commission discussed problems that can occur in disclosure when the behested payment is made from a donor-advised fund and directed staff to prepare a regulation clarifying who is reported as the payor when the payment involves a DAF. And to review on what a DAF, a donor-advised fund, is, the IRS rules state that this is a separately identified fund or account that is maintained and operated by a 501c3 organization. That organization is called a sponsoring organization. Each donor-advised fund account is composed of contributions made by individual donors. Once the donor makes the contribution, the sponsoring organization has legal control over that fund. They own the fund. However, it is the donor or the donor's advisor that has advisory privileges over the distribution of the funds. When a behested payment is involved, it's nice to just sort of walk through this visual of the process. The official is making a behest for payment, and the DAF donor or designated advisor requests payment from the DAF to go to a 501c3 payee. And this request is that the payment be made by the sponsoring organization. The sponsoring organization reviews the request, and if it's appropriate, this is legally appropriate as well as within the guidelines of that sponsoring organization, then the sponsoring organization issues the payment from the DAF. The 501c3 payee receives the payment and a notice from the sponsoring organization that it was made from the DAF. We thought it might be helpful to show you a sample that was provided by the California Community Foundation of what it looks like when a donor or donor advisor makes a request to a sponsoring organization. And this is pretty much the pertinent information. It's a form that is filled out typically stating the fund name, the name of the DAF, the amount, the payee that it's going to, and then there's special instructions that can go with each payment. And that's where the donor or the donor's advisor can specify that the payee be told the fund name or the fund name and the donor's name, or it can be completely anonymous. And then this is signed by the donor or the donor advisor and provided to the sponsoring organization. We thought it might also be helpful to see typically what a payee would receive in terms of a notice from the sponsoring organization. And again, the California Community Foundation provided us with a mock-up sample. And essentially on their letterhead, it would state the fund name, the name of the DAF, which you could see could be something generic like the Generosity Fund, or it could be much more specific, stating somebody's name, the William B. Bark Fund. It shows the date and it notifies them that the payee is receiving this grant, states the amount, and then it states that it's made at the recommendation of the donor if the donor requests to provide that information. It'll state the fund name, such as the Generosity Fund or the William Bark Fund, again, if the donor allows that, and that it's being issued from a donor-advised fund of the sponsoring organization. So the payee gets quite a bit of information when it receives this payment. It's typically not just a check in the mail. So going back to the behest to payment reporting requirements, Section 84224 requires the official to report the name of the payer when a single source makes payments that meet or exceed $5,000, and then all subsequent payments. So you can see when a donor advised fund is involved, you have a number of actors involved that result in a payment and notice to the 501c3 payee. And then as you can see, that arrow is directing up to the official. That information flows from the payee to the official when the official is going to make a report. So the issues that arise are really who's reported as the payor in this a little bit more complicated transaction that when a DAF is involved, and who is the single source. And just as an example of our understanding of how this can go a little bit awry, we have an example here where an elected official staff member gives a presentation on local needs and asks on behalf of the official for charitable donations to various charities. So there's your behest. And an individual, Jane Smith, attends the presentation and decides to make a charitable donation, say to a local COVID relief fund, and she has a DAF. At her direction, the County Community Foundation, which was the sponsoring organization holding the DAF, makes the $5,000 payment from her DAF, which here is called the Smith Family DAF, to the COVID Relief Fund. However, what we found can happen is that the official might report the name of the payor, and this could be a staff member taking a look at information from the payee or the official, just listing the County Community Foundation with no disclosure of Jane Smith or the Smith Family DAF. And this can run into a couple of problems. Number one, the public is not getting a full disclosure if the community foundation is only listed. They're not getting that full disclosure of the parties involved in the payment. And it also can cause problems in the official then considering the community foundation as the single source for future reporting, rather than tracking future payments from Jane Smith, the person who made the decision to have the payment made and just chose that DAF as the fund to draw from. It can also cause problems where you have the community foundation as the single source, and that you might get many payments coming from this community foundation from many different DAFs or other sources. And you wouldn't want it to be lumped under the community foundation umbrella because again, that's not providing the public with the disclosure that 84224 envisioned. So now we're going to get to the proposed regulation. To fully report the payor. The proposed regulation requires in subdivision A, reporting to the extent this information is known to the official. The following is the name of the payor. And this is to capture the parties that are involved. And that's the name of the sponsoring organization, the name of the DAF, the name of the donor, and if applicable, in other words, if a donor's advisor is the one that's making the request for payment, the name of the donor's advisor. Subdivision B requires the official to report this information with as much specificity as the official knows or can determine by inquiring with the sponsoring organization. To track the single source where the sponsoring organization withholds the name of the donor and identifies only a specific anonymous DAF, Subdivision C provides that the single source of the payment is the particular DAF, and the official must designate the name of the payor using a unique identifier for that anonymous DAF. And that, again, is for tracking purposes, so you don't have one large anonymous DAF where you can recognize that there's distinct DAFs making these payments, requests for payments. Subdivision D defines donor as the person or persons who established the donor advised fund and made the payment request, or the person who contributed to the donor advised fund and the contribution was for purposes of the reportable payment. Donor's advisor is defined as a person designated to make the recommendation for payment, and sponsoring organization and donor advised fund follow the IRS's definitions. Since this proposal was posted for this meeting, we received some feedback from the League of California Community Foundations, specifically the terminology of making the request, that it would be better to use different terminology, that this is the person that exercised advisory privileges over the donor advised fund. We've also taken a look a little bit more at single source, and that we might need to expand the definition to cover where there's multiple donors to a donor advised fund, who the single source would be, and spell that out in the regulation. And staff also will be tweaking slightly the definition of donor, just instead of looking at who's established the fund, the donor would be basically anyone who has contributed to the fund. So that completes my presentation. Are there any questions?
Thank you, Ms. Harrison. I had a couple questions before I turn it over to my colleagues. The first is, what was your thinking and rationale for including the donor advisor as one of the pieces of information that would be included within the term donor?
So this regulation is reaching for disclosure, basically the person who had the ability to exercise authority over the donor advised fund. And that could be the donor, or the donor can designate a donor advisor. So we're trying to make sure that we capture the parties that are actively directing that these funds be paid.
All right, so follow-up question on that, and I apologize, I can't remember from the presentation last month from the foundations, but can a donor advisor make a decision to send a payment to a 501c3 without the donor's consent?
So in my conversations with the community foundation folks, is that can happen. So you can have, let's say, grandparents that establish a donor advised fund and decide that their grandchildren should be charged with making the decisions on how those funds are used. And so they can delegate that these grandchildren are going to be in charge of that. It can be for a particular payment that the delegation is made, or it can be for all future payments, so that the donor still has the ability to pull that back. But my understanding is, yes, they can designate somebody else to make those decisions.
All right, thank you. And then switching gears to the single source discussion that you just had, and you kind of briefly alluded to this, but, you know, you say that when there is an anonymous DAF, meaning that what is disclosed is just I suppose, the name or the number associated with the DAF and not the individual donors who control the DAF, right? So that's an anonymous DAF.
So the anonymity can be on two levels. So the donor's name can be withheld, and the DAF name provided, or both can be withheld. It can be completely anonymous with no identifier.
Okay. So, but in either of those scenarios, what this regulation contemplates is that the DAF then, the $5,000 threshold would be applicable to that DAF, right? That would be considered the single source for purposes of the threshold. Now, suppose you have a DAF that is controlled by two individuals. That DAF then is it correct to say that that DAF could make a behested payment up to $9,999 before they would reach the $10,000 threshold to actually start reporting, because each individual would have a $5,000 trigger, right?
So we hadn't really gone to that level in allocating how this would be divvied up between, let's say you have 10 donors to a fund. So I think that that's something that we'll probably have to see how this plays out, and whether or not we're encountering those types of problems. And just as an aside, we don't currently have those types of issues being seen as a problem when it comes to just straight behested payments, where you might have it coming out of a joint checking account. It just really hasn't been an issue. So we aren't anticipating that this is going to be a big issue, but you know, we can handle this as we encounter it. But the basic understanding is on a contribution, for example, when you have a joint checking account and it's signed by one person, let's say it's a husband and wife, and just the wife signs the check, the contribution is typically allocated to the person that signs the check, unless there's some indication or knowledge that it should be from both parties on that check. And I think that it's analogous to apply that in this scenario, where you have, say, it's Jane Smith and her husband, Michael Smith, have this DAF, and Jane Smith makes the direction that $5,000 should be paid. And so Jane Smith would be the person that is tracked for that subsequent payments. Any future payments that are coming from Jane Smith would then also have to be reported by the official.
Right, but in that fact pattern, then, if you just carry it to its logical conclusion, Jane Smith's husband, if he was also one of the owners of the DAF, could make a behested payment of $3,000, for example, and that would not be subject to reporting because he hasn't met the $5,000 threshold, right?
Correct.
Well, I do think that you're correct, that's something that staff ought to think about at least clarifying in the regulation. I mean, yes. I appreciate your point that it may not be a problem, so to speak, but I think we want to make sure it's clear so that folks can follow our regulation for compliance purposes.
Sure, and as I mentioned, staff has identified the need for clarifying single source in the regulation when multiple parties are involved in the DAF, and so you'll be seeing some language on that.
Excellent. Thank you very much, Ms. Harrison. Those are all my questions. Let me turn it over to my colleagues. Other commissioners have questions for Ms. Harrison? Commissioner Baker?
Thank you also for the very helpful presentation. Sometimes just having visuals, even with the graphics and images, makes it very easy to understand. So I'm grateful for that. I have in mind just a very specific fact pattern, and I don't remember if this came up during the DAF presentation. I think of it because let's say you're watching public television and it lists all the people, all the family trusts that contribute to making that program happen. Some of those folks may have passed on. And so the name of the trust, so doesn't reflect who may have actually been the contributor. If I don't know if the same can happen with the DAF. So if there's a Catherine Baker DAF and I move on in life and it still says Catherine Baker DAF, it sounds like under this scenario, whoever is responsible for saying who directed that would have to be disclosed, but the name of the DAF would still be there. I just want to make sure whenever there's a difference between the two, and the name of the fund is very specific, but does not account for who actually made the contribution, that we have sufficiently covered that scenario in the regulations.
Very good point. And I would just point out, and I'm sorry, I've neglected to do this before, in the regulation as it's drafted right now, it says name of the donor or, if applicable, donor advisor. And that or is simply a typo. It should have been and. The memo reflects that it was intended to be and. And just for that reason, because we're trying to capture something that has a lot of variations and variables. And you're right, that donor advised fund name could give us information, or could give us very little helpful information as to who actually made this request. And just to sort of get to the bottom of it, we're trying to get all of the names that are involved disclosed to the public, so the public has that information.
Yes, and also clear that if the fund has a name of someone who is deceased, that it doesn't give the public the impression that, two people weighed in on this decision, that it was all on one. That may even go in a step further. But tease that out as you look at how to present this. The second question is really just, if you're in the situation where it is all is anonymous, you haven't been told the name of the fund, and been told the name of the people funding the fund, so you just have this number identifier. Is that like is there any way to track down who that identifier, or where's this number come from? How does it generate it? And is there any way to track down in the public realm who that is? I don't know that would be appropriate, but I'm uncertain of where this number is coming from. Maybe we heard this in the DAF presentation. I'm forgetting.
When you're referring to a number, are you referring to sort of the internal document that a sponsoring organization would keep?
Well, it's in the scenario where everything is anonymous. And so what the official is going to be disclosing,
I see what you're referring to.
If I'm remembering correctly, there's a number in lieu of anything else that's helpful. So the sponsoring organization is certainly identified, but this number, like, what does the public see and where does this number come from?
So I think the idea was that the official, when they're tracking, should be able to track separate anonymous DAFs. And so if there's more than one anonymous DAF coming from this community foundation, then the report would probably be anonymous DAF 1, anonymous DAF 2, just to keep them separate, as opposed to the payment coming from community foundation, anonymous DAF, and it just looks like it's this huge one anonymous DAF. The idea is to show that these are separate payments. And it's interesting because anonymous payments have not come up as an issue in behested payment reporting outside this donor advised fund context. Just simply hasn't been an issue that's been on the radar. So it will be interesting to see how this plays out. We're starting a process to get a hold of something that has been an issue and trying to address the issue by maximizing disclosure. So we might have to make some tweaks here and there as we go through this process. And if other people have a better idea on how to handle that situation, I'm happy to hear it.
Well, so the number is given to them by the fund, or is the elected official the one who comes up with the number?
We just asked that there be a unique identifier. And so the official could do that. There is a fund number that the sponsoring organization provides with the award letter, with that notice. And so that could be used. Okay,
that would be good to have something for guidance for the officials. And that'll be the first question all the staff and all the officials ask is, okay, do I come up with a number, or where should I do that? That might be one that would help them out. Thank you.
All right.
All right, Commissioner Wood.
So thank you again for our conversation earlier and for this presentation. It's all really helpful. Just following on what Commissioner Baker was saying, as somebody who works with data, if I were trying to distill information about the anonymous DAFs in order to, transmit to the public or study the kind of influence that's being exerted or potentially being exerted, I think the most helpful thing would be to have, I don't know if this violates the kind of spirit of anonymity. And so this may be a non-starter, I'll just say that, but would be to have like every DAF have its own number for when things are anonymous, so that each official is not giving it a number that we then can't match up. Of course, maybe that already doesn't work because it goes against anonymity, but I was just thinking, like, even if I can't know who is behind the payment individually, if I know who else has received these payments, then that might be useful information. But again, it could violate the spirit of anonymity. So anyway, I wanted to put that out there, but I don't really have a great direction to go with it. Did you guys consider it, and am I wrong?
So no, I think you and Commissioner Baker have raised a really good point. And going back to understanding that a sponsoring organization has a number that's assigned to these DAFs, that is something that I think we could use. It wouldn't be just one number, but it would be a number coupled with that sponsoring organization. So it would be, Sacramento County Community Foundation fund number XYZ, and that would become the identifier. And I could see that would work. And I will definitely circle back with these entities, the sponsoring organizations, and see if that's workable. But I think that might be a solution.
All right. Commissioner Wilson has a question or a comment as well.
Yes, kind of a follow-up to some of the questions that were already asked by Commissioners Wood and Baker. Councilor Harrison, thank you for all your hard work on this project, on this process. But I have kind of one question regarding anonymous DAFs. What if you have a situation where there's an anonymous donation, but then 3, 4, 5 months down the road, the elected official learns who the actual donor is? Would there be an obligation to report at that time if the reporting requirements had previously been met based on the fact that this was originally an anonymous donation?
So I think that's a really good question. And generally under the Act, there is a requirement to amend reports when better information has become available. And I think that would be applicable here. We can definitely have a discussion about whether or not we think that needs to be spelled out in this regulation with more specificity. But generally under the Act, that would be the requirement, that the official goes back and amends that report with more precise information.
Okay, thank you.
Just following up on that point, Ms. Harrison, and I know this is sort of a new issue we haven't talked about before, but with regard to the Act's requirement that you update with the most accurate information, what's the time limit on that, if any? I mean, let's say I received a behested payment, in 2021, but in 2023, suddenly I find out that 2021 behested payment was actually from a particular donor. Am I still under an obligation to go back and amend even 2 years later?
I'd have to research that. I don't have that answer off the top of my head.
All right. I mean, I think if there is not a clear time limit set forth in the Act, that we may want to consider as part of the regulation, providing one, just again, in the spirit of providing clear guidance on what the public official's obligations are here.
All right.
Then I had another question actually about the DAFs. I know we were talking about the unique identifier, and I think several commissioners have pointed out some challenges that may present themselves with that, particularly from a data standpoint. I know it was a great point by Commissioner Wood. I mean, if there's not some type of uniform standard, how do you ever measure these things against each other or analyze them? And it made me wonder, is there the equivalent of like a tax ID number or something that is assigned to each DAF, whereby we could, assuming there wasn't a legal prohibition on it, have them use as the unique identifier, let's just say the last 4 digits of that tax ID number. That way there's a clear standard of what the number is. People aren't making up the numbers individually. And I think from a data tracking standpoint, that might be more beneficial.
I'll certainly look into it and see what we can find to better pin down an identification that works not just for one official, but across the board.
All right, thank you. Commissioner Wood?
Just a quick nerd point is that if there are more than 9,999 DAFs, I don't know how many there are, but the last 4 digits wouldn't make it a unique identifier. So we would want to think really carefully about how to make it actually unique. Sorry, just I'd love to be able to
Yeah,
publish
that's-
eventually on these things, right? So, thanks.
All right, point taken. Commissioner Baker.
Thank you. As you go back to the community foundations that you're using as a sounding board here about the number that they use, I'm sure you'll do this, but this is just extra encouragement to really drill down that that doesn't cause a weakness to the anonymity, because if everyone in that organization knows what the number is, sometimes within an organization, only a few people know about that. And so let's say you have a community foundation that has 10 staff and really only 3 people are allowed to know the identity of somebody. I don't know. And if we begin to use these numbers that they're using more broadly, and they're getting researched by great people like Commissioner Wood out there in the area, are we impairing the anonymity even in any way? I think they'll be able to help us understand that, because that would be a concern of mine. Sounds like we're going to do a lot of looking into these numbers. And I guess the only other part is, this is probably more of a comment than a question. We want there to be transparency that does also respect the rules that are out there regarding anonymity. It may be useful for data research to know more information, but I would just wonder what our role is in making sure there's transparency appropriate for the public in our role. And that's not to not facilitate great research, because presumably that research can also be helpful to, say, the media or journalists who are putting a contribution under appropriate scrutiny for the public to be aware of. But I just want to keep that in mind. Where do we as an agency push for information that may be more than is in our appropriate realm to disclose to the public? I think it's all good, but I wanted to throw that comment out there. Thank you.
Just I actually fully agree with all that. So I don't want you to think that I don't. That's why I was asking about the scope of all of it at the beginning, because you let a social scientist have some data, we'll just be really greedy about it. But we have a role here as commissioners to kind of, work toward public ethics and things like that. And so I didn't mean to be too greedy there.
All right, any more questions or comments for Ms. Harrison? Hearing and seeing none, let's go to public comment. Any public comment on item number 6? This is our pre-notice discussion on regulations regarding donor advised funds and behested payment. All right, seeing and hearing none. Ms. Harrison, thank you very much for your work on this, and we look forward to this coming back to us in October.
Thank you.
Thank you. All right, moving along to item number 7. This is yet another pre-notice discussion this month. This one is on our proposed regulations relating to record-keeping requirements for lobbyists, lobbying firms, and lobbyist employers. And here to present on that item will be Senior Commission Counsel Zach Norton. Good morning, Mr. Norton. Good morning. I'll move that. Okay, I think that's going to work.
Good morning, Chair Mandich and Commissioners. Zachary Norton with pre-notice discussion on our regulations dealing with lobbyist record keeping. Those are 18610, 18612, and 18615. So one of the primary purposes of the Act is to ensure that activities of lobbyists are regulated and that their finances disclosed in order that improper influences will not be directed at public officials. In furtherance of this purpose, The Act requires lobbyists, lobbying firms, lobbyist employers, and persons who spend $5,000 or more in a calendar quarter to influence legislative or administrative action to file quarterly reports of their lobbying expenditures with the Secretary of State. The Act imposes specific reporting and accounting requirements, including requirements to maintain records for all receipts and payments for lobbying activity. The disclosure of activity expenses is important in tracking the attempt to influence legislative or administrative action. The Act requires that the Franchise Tax Board conduct mandatory audits of lobbying firms and lobbyist employers. A special unit of the FTB is supposed to conduct these mandatory audits, and the findings, known as audit reports, are supposed to be sent to the FPPC. Both the FTB and FPPC may also conduct discretionary audits. An effective audit requires that detailed records be made available to auditors so that all reported receipts and expenditures may be verified, and that any activity which was not properly reported may be identified by the review of the records provided. This agenda item involves amendments to lobbyist record-keeping requirements. The proposed amendments include the addition of specific records that lobbyists, lobbying firms, and lobbyist employers must maintain, as well as other amendments clarifying the application of existing subdivisions. These amendments are being proposed to facilitate the conduct of more accurate and effective audits. Greater specificity as to the records required will make the audit process more efficient for both the auditors and the subject of the audits. Our goal has been to make specific the types of records that auditors will need to reconcile reported receipts and expenditures with supporting documentation. Staff has worked with Luz Benetti, our lead auditor, and consulted with FTB on identifying the additional types of required records included in these amendments. Auditors have stressed the need for internally and externally generated records, not just those generated by the subject of the audits. This proposal includes requirements for more original source documentation, which allows for independent verification of the information disclosed on reports. In short, the more independent verification, the more effective the audit. Current regulations. So these regulations concern the record-keeping requirements for lobbyists, lobbying firms, and lobbyist employers, and persons spending $5,000 or more to influence legislative or administrative action. The regulations all contain relatively similar provisions, but all lack specificity as the types of records that are required to be maintained. Proposed amendments to all three regulations identify the type of source documents that must be maintained in support of any activity expense. Adding to this list, legible images of canceled checks, credit card statements and credit card receipts, contracts, agreements, correspondence and communications, journal or other record showing payments made or incurred, invitations to lobbyist-sponsored events, and rosters of attendees. The existing regulation includes some type of records that must be maintained, and these additional records are necessary for thorough and effective audit and verification of accurate reporting. And we also note that under current banking practices, canceled checks are no longer provided to account holders, but scanned images are readily available through online banking. Our proposal also replaces the broad standard allowing for a written voucher to be prepared when it is impractical to obtain a receipt or invoice, with a narrower exception where a written voucher or annotated receipt or invoice, which includes the full name and official position of each elective state official, legislative official, agency official, state candidate, or other member of the immediate family of one of these officials who is a beneficiary, the total number of all beneficiaries, and the amount of the expenditure attributable to each beneficiary, must be prepared to support an expenditure only in the event that source documentation cannot be obtained. The existing regulation states that a written voucher may be prepared in the event that it is impractical to obtain a receipt or invoice. We note that current technology easily allows for vendors to print receipts or invoices, even for transactions that have occurred long in the past. And such documents are routinely obtained in enforcement cases where the documentation is otherwise unobtainable. So this exception is really only necessary in circumstances where this information cannot be obtained. as I've noted, we're also adding the requirement that legible images of canceled checks may be maintained in the place of the canceled check itself. These are already available through online banking, and I think this also results in more efficient record keeping, both for the subject of the audits as well as for staff. It's easier to obtain printed images of checks than it is a shoebox full of the original checks. We also add a requirement that a lobbying firm maintain all contracts, agreements, correspondence, communications, journal, or other records showing payments made or incurred when it subcontracts with another lobbying firm for lobbying services. And these are also necessary to ensure that everything that is reportable has been properly disclosed. And with that, are there any questions at this time on proposed regulations?
Thank you, Mr. Norton. The commissioners have questions or comments for Mr. Norton. Commissioner Baker?
Thank you. Real quick, the lobbyist disclosure world is not an area that I'm familiar with, so this was very new to me, and I appreciated the questions that I was able to get answered in advance of this hearing to save everyone time. But one or two that come to mind. The first is, how much, can you characterize for us, how much is what we're asking different from what is the common practice now? So I just have a sense of if this is going to be a very big change, or it's a lot more that they'll have to track and keep, or if this is, sounds like for the most part, not only we should expect this, but it's generally what folks are doing. It's just not spelled out in the regs.
Yeah, thank you. And I think it's the latter. It's my understanding this is sort of generally what is already being done. It's just not spelled out in the regs. As I've highlighted, we're adding the requirement that legible images of canceled checks be provided in place of canceled checks, and we know that for the most part, people have access to those images of canceled checks through online banking, and this is just sort of catching the reg up with modern technology. And in terms of some of these other things, records of contracts entered into with lobbyists, those are already exist, we assume, and we're just adding that specificity. And the specificity will help streamline the process. It makes the record-keeping requirements of the covered entities abundantly clear, and it also enables the staff who is conducting these audits to sort of be specific in pointing out when documents are missing, that, okay, well, we need this, this, and this, and this has been highlighted in the regulation. And having worked in the enforcement division and worked closely in the past on audits involving campaign committees, I know that sometimes that is kind of a back and forth process. So having an audit record keeping reg that is specific, much like our campaign records regs, that gives staff something to point to. And I think it makes it clearer for both parties as to what their obligations are.
Yeah, I think that if we can give people some certainty, that's helpful on the regulated community end as well. And hopefully we'll hear during the public comment on these regs, this is reasonable, this is completely crazy, or something in between. The other question really has to go to, it has to go to the voucher. It's the voucher. I'm just looking for areas where there could be potential abuse. So let's say somebody has not been particularly great about their record keeping. Is the voucher potentially an area that they can use as a backstop for that? Or are there ways in which that can be very rarely used? I'm trying to understand this voucher concept a little bit better.
Yes, and that was kind of our concern with the way it is written now, that I think, and it's in my discussions with staff, we think the current regulation has a little bit too much leeway on the term voucher. It says, well, I don't happen to have a receipt or invoice, so I'm just going to draft up this voucher very quickly as soon as someone's asking for records. So I think we're trying to tighten that up a little bit to ensure that, no, the voucher is really only acceptable in the events where there just is no other documentation. And I think even in talking to staff, they say even if you have a receipt or invoice that is annotated, because it may not include all of the pertinent information when it is provided by the vendor, it is great, according to Luz, if as part of the record keeping, you can make annotations and say, oh, this put on the back, this was for a lunch and included the following attendees, and that way you have a detailed record that is generated by a third party and not solely internally generated. So that's why we've tried to tighten this up a little bit more, and the vendors are often able to provide documents. Long in the past, we've come across that in enforcement where you can go to a vendor and say, well, we have this mailer, we know it was sent, it looks like you were the printer, we're trying to figure out who should have included sender ID, and they can often look back through and say, oh, here's all the documentation, here's billing, here's the invoice that tells you who contacted us to commission this piece, and we can kind of go back and track it back that way. So again, technology has made the idea of these handwritten vouchers somewhat obsolete, I think, in most cases.
Good. Well, we'll probably learn that a little more as we go along as well, and see if it becomes hopefully not an area for backstop. The final one just is maybe one that you can't do anything about in these regs, but what we learned earlier this year, I believe, shortly after I came on the commission, was that FTB is currently not doing audits of the very things we are asking people to keep, and for their disclosure purposes. And the memo does mention that there's FTB audits and then there's discretionary FPPC audits. My understanding that our discretionary ones are when something has triggered that, maybe a complaint or perhaps a news story or something else that we came across. Otherwise, these disclosures are not being audited if it's right now, unless it's our own discretionary audits. Is that correct? And because these could be fantastic regulations, but they won't get us very far if nobody's checking on things.
Yes, you are correct. It is my understanding that these audits have not occurred in the past several years. And just in speaking to audit staff at the commission, I think a part of that problem has been that because of the record keeping requirements that we have currently are so scant, that there is often there's very little to audit. You're just sort of reconciling the reports with a very narrow set of records, often self-generated, that are necessarily going to match perfectly with everything that is in those reports. So that's part of our hope as well, that by expanding the list of required records, that it will lead to a more substantive audit, an audit that actually allows for verification with externally generated documents, that once these are being done, they may actually generate more, and hopefully that will lead to more audits taking place, because they will generate more substantive findings. That's kind of our hope.
Well, that may be a subject that we'll have to bring back as a commission, is if FTB is not going to do that, and what we need to do to make sure there are appropriate audits beyond the regulations that say let's make it easier to know where to go with it. But that is probably a subject of another day, and an axe that I'm sure we will be grinding. So thanks,
Commissioner Baker. Commissioner Wilson?
Yes, thank you, Mr. Councilor Norton, for your work on these regulations. Kind of as a follow-up to the issue that Commissioner Baker raised, in terms of the lack of audits occurring at the FTB, is that due just to the fact that it's difficult, based on the current regulations, to gather the documentation to do audits, or is there a lack of staff resources at the FTB, or an unwillingness to do the audits?
From what I understand, just having heard from FTB, there is probably a lack of staff resources that is a big part of it. And I think there is, and that's just kind of my understanding in talking with staff here, I think there's sort of the idea that because these audits typically don't result in material findings due to the fact that there's such limited information that's available to conduct them, they have sort of been deprioritized. So I think that's part of our hope, is that if we give FTB more of the records that they will need to actually conduct an audit that is meaningful and informative, that will then sort of encourage them to kind of reprioritize some of these audits, because I think that's kind of been the impression now, is that they just sort of confirm everything that's on the filings, or they aren't able to get many records and the audit just sort of maybe doesn't go anywhere.
Subject to input from other commissioners and the FPPC staff, I think as we move forward, it would be helpful to identify if there's a lack of staff resources, how much more staff resources are needed so that that can at least be assessed, so we avoid the problem that, well, we have these regulations, but they're meaningless because of a lack of quote-unquote staff resources. So I think that would be helpful to look at down the road.
Yes.
Yeah, and to that point, Commissioner Wilson, we did, before your time on the commission, we did have FTB come and talk to us about this issue of audits, and they studiously avoided, is my recollection, saying that they didn't have the resources to do it. What they instead, I believe, said was they had other programmatic obligations that were a higher priority, essentially. And so I think, I'm not sure at this point that we know whether it's truly a resource issue, whether it's something else.
Yes.
I think the advantage of these regulations, though, is twofold. First, I think the benefit to the regulated community would be that it's clearer for them what records they need to maintain in order to be in compliance with the Act. The second piece of it, and the piece of it that I think is critically important, really, is that we are able to more efficiently audit. We will avoid the back and forth. When there's an absence of a clear standard on what types of records need to be maintained, it begs a back and forth, and frankly, it takes longer. And that is one of the things that we continue to try to do here at the Commission, is try and expedite and make it shorten the amount of time between investigation and resolution. And so this, to me, goes directly to that point, which if FTB is unable, for whatever reasons there may be, to be able to conduct these audits that they are statutorily required to do, and they have not been doing for years, to the tune of hundreds of audits that have not been done, then we will be able to use our discretionary audit authority to do that. And we'll be able to do it more efficiently to the benefit of the public in compliance with the Act. And so I think it kind of goes to all of those points, really.
Then it begs the obvious question: if the audits were theoretically shifted to this agency, what kind of resources would we need to be able to follow up with extensive audits under the direction of you and the executive director?
I think, as Commissioner Baker said, that piece may be a conversation for another day.
Oh, I understand.
Yeah. But I think, just to add to that, I think, having consulted with Luz Benetti, our chief auditor, I think that this is sort of seen as the first step. It's before we would even consider expanding the discretionary audits. We need to make sure that we have access to the information and that it's clear to the regulated community what their record-keeping duties are going to be. So I think they're very optimistic that this is going to be helpful.
Thank you.
All right. Any other commissioner questions or comments for Mr. Norton before we open up to public comment? All right. Hearing and seeing none. Do we have any public comment on this item? Oh, sorry. Commissioner Cardenas, please.
Mr. Chair, thank you. Mr. Norton, good morning. I have a question about a proposed amendment to 18610. The staff report suggests that among the records to be retained newly as a result of the proposed amendment would be contracts, presumably contracts between the lobbyist and the client related to an activity expense. Now, when I read the staff report, it reads as if such contracts or agreements would be retained only to the extent that they somehow speak to a particular activity expense. However, when I read the actual proposed amended language of 18610C in conjunction with 18610B, it reads more as though the any contract that is related to what ends up being an activity expense has to be retained for the purpose of a possible FTB audit. In other words, years after a private agreement is entered into, there is a reportable expense, and by virtue of that one reportable expense, let's say attending an event, that contract needs to be specifically earmarked by the lobbying firm reporter to be retained for the purpose of a possible FTB audit someday. Is that right?
Well, it goes to the quarterly reporting. So if there is a contract entered into during that time frame that does pertain to a reportable expense, it would need to be retained. So that could be an agreement to contract with a lobbyist firm, or where one firm contracts with another. But I think it would need to relate to something that triggers a reporting obligation for that time period. And at that point, it would be subject to retention.
I'm sorry, where are we procedurally in this? Has the regulated community, particularly reporters under this, under 18610 and the related regulations, lobbyists, in other words, have they had an opportunity to comment or opine on this? I'm just wondering, as a former practitioner with private clients, keeping private agreements with my clients, because one day they may be audited because I happen to go to an event, that at least borders on being onerous, it would seem to me. I'm just wondering if we've gotten any comments along those lines.
Yeah, thank you. We have not actually received any comments from the regulated community at this point.
All right, thank you.
I want to clarify something, though. Maybe I just misunderstood, but the obligation to maintain the records is for a 5-year period. It's not indefinite, correct?
That is correct.
All right. I just wanted to make that clear. I did have a question, though. But thank you, Commissioner Cardenas, because it prompted me to remember a question I meant to ask you, Mr. Norton. And that is, among the items that we ask to be maintained are communications and correspondence. And I understand the point and the value of that in terms of substantiating a report for a particular expenditure, right? There may be strategic information or proprietary information, for lack of a better term, embedded in those communications. What happens when that's the case, that the communication can serve two purposes? One, to substantiate that a payment was proper and has been reported correctly, but also it contains maybe a back and forth about strategy. What do we do? Do we accept redacted records in those circumstances?
Yet I don't see that there would be a problem in redacting it, because really we're only looking at getting towards the communications that relate to the reported expenditure. So it certainly would not be an email dump or something like that. It's really just to document through independent verification that if there's something that substantiates the expense, that we have documentation of that, but we're not looking to go further than that.
Okay, I think as a lawyer myself, I think that would be really helpful, so that we can give some assurance, maybe clarify that in the reg, that records that contain confidential or proprietary information can be submitted in redacted form. I do think that's something that staff may want to consider. But I see Ms. Executive Director West giving me the look. So.
I just think maybe we should talk to the auditors about it, because audits aren't investigations. They're confidential, and the records are returned at the end of the audit. So I would make sure that we want to talk to them about auditing standards and what the proper procedures are first before we come up with ideas.
Does that mean there's no public disclosure of the documents submitted as part of that?
Right. It's the audit report that is public at the end, and not the audit file.
Okay. All right. Well, I think if staff can just get together with the auditors and report back to us on that, I think it'd be helpful. All right, Commissioner Baker?
You triggered a question in a fellow lawyer. So, you know what I heard here was that the purpose of asking for correspondence and communications is to substantiate the expense. So in addition to mentioning that you may be able to redact, we're going to have to give some guidance on what can be redacted, so it's not overly done. But perhaps I just encourage you to consider if we want to refine the actual regulatory language to say, instead of concerning the activity expense, perhaps it is substantiating come up with your better word, narrow what correspondence we're talking about. Not only so they don't have to keep a potentially ridiculous amount of correspondence, but we don't have to look at a potentially ridiculous amount of correspondence. We might want to have some language in the reg that's specific in that sense. I got to figure out how to lower my hand. Okay.
Yes, that's a very good point. We'll look at that.
Great. Any other questions for Mr. Norton? All right, let's go ahead and take public comment on this item. These are our pre-notice discussion of our lobbyist record-keeping requirements. This is item 7. Any public comment? Hearing and seeing none. Mr. Norton, thank you very much for your presentation. I take it we're going to be seeing you again in October then on this.
Yes, that is correct.
All right, looking forward to it. Thank you, sir.
Thank you.
All right, we're moving right along. We are now on item number 8. This is now adoption. This is not pre-notice. This will be an adoption, potential adoption of amendments to existing regulations and a proposed new regulation concerning electronic advertisements and online content. And returning to the table from prior presentations on this issue is Commission Counsel Torrin Lewis. Good morning, Mr. Lewis.
Good morning. Let's see. Hopefully everyone can hear me now. All right, can everyone see the presentation? Yes. Excellent. So good morning again, Torrin Lewis, Commission Counsel at the Legal Division. I'm going to be speaking to you today about some proposed changes to regulations regarding electronic advertisements and online content, as well as one proposed new regulation. So to recap where we left off on these issues, I last presented to the Commission at the June Commission meeting. That time, we pre-noticed amendments to Regulation 18421.5, 18450.4, as well as proposed new regulation 18450.9. Also in June, the Commission instructed staff to move some language regarding amplification from the proposed changes to Regulation 18421.5 into a separate standalone regulation. We have done so, but this separate proposed regulation will be up for discussion, pre-notice discussion at another time. So again, Regulation 18421.5, this deals with reporting and expenditure for paid online communications. Regulation 18450.4 deals with a slight tweak really to video and television advertisement disclosure, really more of a clarification. And finally, proposed new Regulation 18450.9 deals with website advertisements and third-party social media advertisements. So just a visual overview of what we'll be talking about very briefly. So on one hand, we're going to be talking about the expenditure reporting requirements under the Act, which is under 18421.5, the so-called blogger regulation. On the other hand, we're also going to be talking about advertising disclosure rules, and this includes the discussion of the video ads in 18450.4, as well as proposed new regulation 18450.9, dealing with social media influencers and so forth. So starting off with regulation, the proposed amendments to Regulation 18421.5, and again, this is the so-called blogger regulation that deals with committees paying third parties to post favorable or unfavorable communications on websites that are not the committee's website. And so the first proposed change here is really just updating the language to address an expansion of online platforms where this paid content appears. And so, for example, we added the terms web application and digital application, since that is language used in the Act, to subsection A of the regulation. At the Commission's instruction, we also defined these terms, and the definition is pictured here. We essentially referenced, again, the Act and how those terms were used in the Act, and then based our definition on commonly understood terminology and usage, both in industry and legal definitions. The third thing that our proposed changes would do is expand the current expenditure reporting requirements of 184215 to include additional information about paid online communications. And this would include a social media poster's username or handle, or in the case of an op-ed, for example, the title of said op-ed or article. And so pictured here, once again, is this canine social media influencer, and let's suppose a committee paid GIF-POM for a favorable or unfavorable Instagram post. Highlighted here is an example of how that might appear under these changes. It would include the handle as well as the actual URL, in addition to the amount paid and the address and name and so forth. The next change, proposed change to the regulation, is clarifying in the case of communications that fall under this regulation, but also meet the definition of an advertisement under the Act, that the disclosure requirements here are in addition to those disclosure requirements for advertisements under the Act. So we're not creating any sort of really divergence or carve-out or anything like that. A related point is, I think also following discussion in June, we've deleted subsection D, which previously had clarified that paid advertisements placed online by a recipient committee that are quote-unquote purchased at regularly published rates were not subject to the additional reporting requirements. And I think this was the aim of this was really was to avoid rather creating some sort of blanket requirement that would cover, say, your traditional paid banner ad on social media, for example. But to update this language and kind of streamline the coherence really of the regulation, we moved this clarification essentially to new subsection I under the definition of content. And so we instead clarify here in subsection I that the definition of content doesn't include an advertisement created by a committee and provided, for example, to a platform like Facebook to display as a paid Facebook ad. So I'll pause there. I'm not sure if the commissioners have any questions about the proposed changes to Regulation 1842.1.5 before we move on.
Any questions for Mr. Lewis on this portion of the reg package? All right, hearing and seeing none, please continue.
Okay. So I should mention here that we're going to jump over 18450.4 briefly and skip ahead to 18450.9 just because we thought there were some points that will be made here that hopefully will make that discussion a little clearer. And so, again, here we're talking in the case of 18450.9 about a new regulation that would deal with disclosure on ads paid for by a committee in the case of a third party posting, for example, on social media. And so to back up for a moment to show what this currently looks like on a committee or candidate's own social media post presently, it's fairly clear who paid for the ad. For example, here pictured, we have a mock-up of an Instagram post made by a candidate on their own Instagram profile. And in such a case, for candidates, ad paid for by disclosure would be hyperlinked, and the viewer could then find that on the candidate's profile or landing page. And again, the post would automatically link back to that required disclosure. So again, in the case of a candidate or a committee posting on their own, using their own profile, that is currently fairly clear. Where there is a lack of disclosure is here we have pictured a mock-up of, let's say, an Instagram post where a candidate or committee pays a third party, a so-called social media influencer, to post on the committee's behalf. In this case, it's not immediately clear who paid for the ad. And in fact, it looks like the influencer alone is the source of this post. And so the Act only requires disclosure on the committee's landing page, not on this influencer's landing page or post for that matter. And so informally, the legal division has advised tagging the committee in the influencer's post so that viewers can determine who paid for the ad by clicking on that. And so, sorry, that's just some background. So essentially what proposed new regulation 18450.9 does is codify this advice or this clarification by requiring paid posts by influencers, third parties, to tag the committee that paid them so that viewers can link back to the committee's profile or landing page to view the required disclosure under the Act. So a separate but related matter, the second part of proposed new regulation 18450.9 deals with the location of the required disclosure on posts on non-social media sites. So in other words, when a committee posts on a non-social media website or blog that are not the committee's own website or blog, disclosure is required at the top or bottom of every page, or sorry, I should back up to clarify. This regulation would provide that the disclosure would be required at the top or bottom of each individual post. And this is in contrast to, in statute currently, the requirement for a committee that posts on its own website is that the disclosure be at the top or bottom of every page of the site. But in cases where a blog post is made outside of the committee's website, as shown here in this next slide, it's not particularly helpful to the viewer if on a landing page of a blog, for example, there's a disclosure, but when you go to the actual post, and I'll skip back here, let's say this is an example of the post talking about why people should vote for a particular candidate, if the disclosure is not on the particular post itself. And so it's more practical and useful, informative to the viewer to, in this case, of sites other than the committee's own website, require the disclosure at the top or bottom of each individual post. Any questions about this proposed regulation?
Any questions for Mr. Lewis? All right, please proceed.
Okay. So lastly, skipping back in order to the proposed amendments to existing regulation 18450.4. some questions have arisen about or rather whether videos posted on social media that also qualify as advertisements under the Act require disclosure on only their landing page of the committee and not the video themselves. Again, informally, the legal division has advised under this circumstance that advertisements in the form of videos that fall under Section 84504.3 of the Act, no matter where they're posted, have to follow the video disclosure rules, and that would include videos posted on social media. And so here's an example, just pictured here, of the required disclosure. And what this regulation would do is, again, just clarify that a video posted on social media that's required to include disclosures under the relevant provisions of the Act, the relevant, I'll call them video provisions of the Act, must contain disclosures on the video and not simply on the profile or landing page of the committee that paid for them. I think that's all I have as far as my presentation, but happy to answer any questions if there are any.
All right. Thank you, Mr. Liu. And thank you for your work over, it feels like, many months now, refining and working on this reg package for us. Definitely a great job. Do I have other commissioners have any questions, comments? Commissioner Baker?
Thank you. Yes, also echo the gratitude for easy to understand presentations that have visuals and just a very comprehensive work on this set of regulations. I only have a question about this last one, 18450.4, and it's triggered by both a sensitivity to when there may be language in the statute that we are trying to see as consistent and that may not be. So at the in the memo to us on page 3, there was a mention that the Clean Money Campaign, the sponsor of the legislation that enacted the disclosure provisions that you have on this very slide, they've advised that doing what you're proposing is consistent with the intent of the law. It's the end of the first paragraph of that page, under 18.4. Okay. That just kind of popped in my mind. Have you been made aware of anything in the statute that makes it unclear that we can do this? Or is there any statutory language that may be in conflict with what we're trying to do? Because when a regulation is different from a statute, that causes issues. And I just wanted to know, because that popped up in my mind after I saw that sentence.
Sure,
anything in the
that's a great
statute
question.
that could be unclear? Yeah.
Yeah, that's a great question. We actually don't think it's unclear. It just requires some extrapolation. And so, to give you the breakdown, I think it's in section 84504.3 H1 of the Act. That's where there's some language that states that the disclosure required in subdivision B shall not be required on each individual post, comment, or other similar communication. However, B itself is not referring to videos. So in other words, H1 of 84504.3 is referring to B, as is the case in which disclosure is not required on each individual communication, let's say, to put it succinctly. But G is the section, the subsection, I'm mixing up the nomenclature now, that contains the video rule. So it requires some close reading, which is why we think it would be helpful to spell it out clearly for everyone in regulation, but there's no conflict.
Okay. See, and I will confess I don't have the statutory language in front of me. It was one of my questions, is what were the statutory provisions that were needing more clarification? I just want to make sure, or at least I'm getting your opinion, that we're not looking at something where we are constricting or expanding or throwing in our own interpretation, because that gets us into all kinds of troubled areas. And it is helpful that the Clean Money Campaign is mentioning that they think it's consistent with the law. Of course, the legislature and the people who vote for it may pass it for different reasons. So I think that's instructive, but not definitive. And that's always going to be my concern, and is when there could be that issue. So I suppose that's more of a comment now at that point. Thank you.
Sure.
Do other commissioners have questions or comments for Mr. Lewis? All right, why don't we go ahead and open it up to public comment then? Public comment on item number 8. This is adoption of the online advertising regs. All right, hearing and seeing none. Mr. Lewis, one quick question for you. We've had this on the agenda for quite some time, both here at the full commission meetings and at Law and Policy, both pre-notice and here today. Have we received any feedback from the regulated community on these regs at any point?
No, none to my knowledge.
All right, certainly had an adequate opportunity though, if they had concerns. All right. Well, I will move adoption of this reg package. Again, I think Mr. Lewis and the other staff have done a great job taking our input and putting their thought and perspective into this. So I move adoption.
I can second.
All right. Mr. Bainbridge correctly reminded me that there's a question about the effective date. And Mr. Bainbridge, can you just remind the commission again for clarity the effective date of our regs?
Sure, they're effective upon adoption and then publishing typically, although we can choose something else. I think in this circumstance, because we're still working on the amplification piece of this, and because it's a campaign rule, I think it would be wise to make them effective January 1st, and then that way they can all go into effect all at once, and it'll be clean for a new year, the new election year, that these would apply. So we can adopt them now, and then we'll just state that they're effective January 1 would be my recommendation.
All right. I think that absolutely makes sense. Commissioner Wilson.
I would agree that because it does relate to campaign activity, to have a January effective date makes sense.
All right. Well, for the sake of clarity, let me withdraw my prior motion and state a new motion, which is I move adoption of these regulations with an effective date of January 1st, 2022.
And then I'll second the amended motion.
Thank you, Commissioner Wood. Ms. Linker?
Commissioner Baker?
Aye.
Commissioner Cardenas?
Yes.
Commissioner Wilson?
Aye.
Commissioner Wood?
Aye.
Chair Matich?
Aye.
The motion passes.
Great. Again, thank you very much, Mr. Lewis. Great job.
All right, thank you.
All right, our next item is item number 9, and this is the final report of the Digital Transparency Task Force. This is a task force that the Commission approved back in the fall of 2019 with the idea of coming up with some better approaches to regulating online political activity. And part of the reason we did that is we looked at the data, and historically, online political activity had been, the tens of thousands in terms of a budget for political campaigns, and it's quickly gone beyond that. It is now, $10 billion over the last election cycle. So it is clearly the way of the future. It's important that the Commission, sort of writ large, periodically look at ways that we can continue to make our regulations and our approach relevant to the way campaigns are communicating with voters to enhance transparency. That is one of our core goals as the Commission. So the Commission approved the creation of the task force to look at this. It included academics such as then Professor, now Commissioner Wood. It included former Vice Chair of our Commission, Commissioner Hayward, also sat on that commission with myself and now Commissioner Wood. We brought together folks from the digital platforms themselves, academics, political science, practitioners, lawyers, et cetera, in this space, all to put our minds together and really come up with some best practices here. And so that is what ultimately is presented here in this final report that was approved back in July unanimously by the task force. And so it is my hope that the Commission will approve the transmission formally of this report to the legislature and the governor's office with our recommendation that they take a hard look at these recommendations and put them into law. So that's my piece on it. Commissioner Wood, I don't know if you wanted to add to that at all as a member of the task force.
You know, I just want to reiterate part of what you said, which is that it was just incredibly thorough. So it wasn't just that we had participants, you know, who are practitioners, and then within academia who are, you know, at law schools and political scientists, and then, you know, some of the public interest communities, but we also had people speaking from, you know, the platforms and from other states who do this sort of work, or who have tried these sorts of things. And so for me, it was a really informative and thorough experience. And I think that what we came out with was a really nice compromise document that I think will serve the public very well if the legislature decides to move forward with it.
Thank you. Do other commissioners have any questions or comments on the final report? Commissioner Wilson?
I have a comment. I just want to commend the work. I started reading the report and found it to be very, very useful, very informative. So, you know, Commissioner Wood and all of the staff that were involved in doing all this detailed work, at least from my perspective, I found it very informative.
Thank you. Oh, Commissioner Baker?
Thank you. And I thank colleagues for working so comprehensively on this. As I read it and then watched some of the prior deliberations of the task force, I thought it'd be great if we could see that done more to solve tricky issues. So, you know, bringing a lot of stakeholders at different viewpoints. And I think it resulted in a document that is, you know, the fact that you can get a unanimously adopted document is very helpful. The couple of thoughts, since I'm so new in the commission part of this, and it really just caught up by reading the minutes and watching some of the hearings. I did want to ask about the any alternatives that may have been explored to a state-run database. And it might be because I have scar tissue from the Breeze technology fiasco that happened several years ago, or just how databases that are managed by a government entity tend to become outdated or they're difficult. And if there were other options that, I'm sure there were other options that were looked at. And I just wanted to hear from those of you who are really rolled up your sleeves and were in the weeds on this, what some of those might have been, because that's the part that out of all the report, that knowing this will go to the legislature, I believe, you know, when that time comes, I may not be able to support legislation that says there should be a state-run database. There may be better options. Can you talk a little bit about what those other options might have been, and so we can see how that weighed out?
Sure. I guess I'll start and then I'll kick it over to Commissioner Wood to add any comments she may have. But first of all, I think, you know, under existing law, actually, platforms are required to maintain copies of various political advertisements that are posted on their platforms. And experience with that structure currently in law, not just here in California, but in other places, has shown that there's very little consistency across the platforms about ultimately what's defined as a political advertisement, whether it is available or not, what is taken down from the archive without any public notice whatsoever, what is put back on the archive without any public notice whatsoever, and more generally from an enforcement standpoint, and this is, I think, just a comment writ large. I mean, typically we are very concerned about the integrity of records that are maintained for compliance with our laws, and farming that out to a private entity is sort of inconsistent with the notion of ensuring the integrity of those records that will be used to pursue violations of state law. In this case, there's also very interesting that Maryland was one of the first states to take a crack at this, and there was actually a federal appellate court decision that cast some doubt and struck down portions of that law. And when I read that decision, I felt like, sort of in between the lines, part of what the court was saying is, you know, if you think it is so important to have an archive of political advertisements that are online, the state ought to do it itself. It ought not deputize private actors to do that for it. And that really resonated with me. And I think that is the right point, frankly, is if we really want transparency for purposes of accountability, et cetera, then we need to do it. We can't rely on other folks to be doing our job for us. So we did look at what some other options, what other states have done. We also had people from Los Angeles and New York who have done these archives come and talk about it and assure us that this can be done in a relatively cost-efficient way. It can be done in a way that makes it easy to comply. And so I think after balancing those considerations, the task force unanimously came down on the side of a state-run archive. So Commissioner Wood, did you have anything you wanted to add to that?
Only to say that I actually, part of me had the same question when we started out, and the course of all of this, for exactly the reasons the chair points out, brought me fully into thinking, yeah, we really need to be doing this in-house.
That's helpful. Because part of me was thinking from the perspective of, as I mentioned, databases and technologies that state entities just are like big ships trying to get around an iceberg. They don't update them and then become difficult. And the other part is the recommendations regarding when a campaign will have to upload their ads. And I see so many of the 24-hour violations that we see in our world and, of stipulations and otherwise. And I was concerned about the low budget, less sophisticated campaigns, which might have been mine, successful campaign in 2014. I think about those folks instead of the bigger, more sophisticated campaigns and entities that will not only have the budget to pay somebody or buy the software that does it, but they're more likely to avoid a 24-hour rule violation. And ultimately, that raised concern for me is both the state doing it and then a potential, not just burden, but real, I don't want to say equity issue, but how the low budget grassroots campaigns may have a difficulty realizing that this is to send a report to the legislature for them to begin to consider. I also wondered, and I welcome your thoughts on this one, if instead of a state entity having the campaigns required to just post on their websites, here's a tab, here's all the ads that I have had something to do with. I've put these up so that they are kept there and that they have to keep them for a certain period of time for any potential enforcement periods. Maybe it's not always going to be posted, like 3 years later, they might not still have them posted on a website, but that they have them in case there are complaints or audits. I don't know if that looked like maybe a free speech issue or if that looked like it just wasn't going to be complete enough. But I know Chair and I may have chatted about that as an alternative in the past. Was that explored at all? And was it looked at as, again, not as comprehensive, too hit or miss?
Yeah, well, Commissioner Wood, do you want to take that, go first, or I can?
Yeah, so I actually think that having all these kind of mini silos where every committee does their own. So first of all, not every committee really even has a website. And secondly, it might actually be much more expensive. Like my husband and I are kind of going through our budget right now, and I'm like, why do we pay so much for a website that we don't even really update anymore? So I think that my impression on what's going to happen is either the platforms will just automatically upload it to the state, or there'll just be a link and you can just upload right there. They're going to make this pretty straightforward, I think, for the campaigns to do. And then they won't have to pay for that web maintenance and make sure they're paying their server provider and all the rest of it. So I actually I think the compliance side for the campaigns will be pretty simple, actually, in terms of timing to get it uploaded. I had a response to your other question, but I've now spaced out on what it is. So maybe I'll meditate on that while the chair.
It might have been to the less sophisticated, low budget campaigns.
Oh, yeah. Yeah. So similarly, I just think this is going to be fairly straightforward and very cheap for them to do. I don't think it's going to be all that complicated, but I had the same thought because, right, this is the cheap way to advertise, right? It's probably cheaper than, door hangers, and it's definitely cheaper than TV and radio ads. And so I did wonder about that too, but over the course of all of this, just really came to believe that the compliance is not going to be very complicated for them. And certainly if they're playing in any other realm, politically, that it's not going to be any more onerous than anything else they have to do.
Thank you.
Yeah, and I think just sort of piggybacking on that comment from Commissioner Wood, I think one of the benefits we had is because we had a big table of folks who were putting their minds together on this, we had practitioners, campaign lawyers, who have experience, actual experience in the city of Los Angeles where they are required to upload these ads as part of what they're doing. And they were pretty clear to us that this is not a hard thing to do. We can do it, close to an election cycle on an expedited basis, otherwise, along the normal reporting schedule. And this isn't going to be a great burden. And I thought that was helpful and reassuring, frankly, because we don't need to speculate about it. We have people who are actually doing this today. So
Yeah, very
I agree
helpful.
with you, Commissioner Baker. Their concerns. Unfortunately, we had some data on that already.
My last one had to do a good bit with the I don't want to say it's proprietary information, but what has to be disclosed, the targeting information. I saw in the minutes that there was some conversation about that. Some people raised that as a concern. And certainly for the public, I think the most primary point is that there is this ad out there and who paid for it? Who's responsible for this message coming to me so I can kind of see it. But knowing, and they targeted women over 50 who live in the East Bay and have, or maybe it was gender or I can't remember if geography is one of the content points. If how you resolve what was too much proprietary information, and we're really just helping the campaigns give them information that they love to know about their opponents so they could adapt real quickly and change their messages. That's my final point that it kind of caused me reservation. How much we're asking them to disclose on the targeting.
Yeah, we spent a couple minutes talking about that over the course of a year plus. And I think, look, I think we tried to be, I think at the end of the day, what we have recommended here is an effort to strike the right balance, right? We want to provide greater transparency, but I think we also we're very clear that we understand there's proprietary information. We're not asking the consultants to turn over their playbook, but we are asking them to disclose information which is essentially akin to what is being disclosed with respect to TV and radio spots already, that type of information. So there's a level of parity there that I think, at least to my mind, helped me arrive to the point where I think that was a good balance. And I also think, going back to your original point, Commissioner Baker, why state-run archive versus, the current state of the law where all the archives do it themselves. It's very interesting. The archives currently are not uniform in how much data they're disclosing about targeting information. So that is yet another benefit, to my mind, of having a singular state-run archive where we can have consistency in terms of the information about the ads that's being disclosed publicly.
Thank you. I appreciate it. As you can see, I had a lot of issues that I grappled with, and you did it for a year and a half. So I'm grateful for that. And with a big table, as you mentioned, I went into this thinking that I don't do it often, but I may abstain because I have some reservations about any one particular point. But I'm going to support that this recommendation go to the legislature, and there will be more discussions in the future potentially about specific bills, where if I have opinions on these points, I'll be able to hash them out. But this task force has done comprehensive, extensive work that I'd at least like the legislature to know. Maybe it's for the record. I will weigh in on those battles as they come forward, but I think it is good to be able to send this type of report to the legislature. Thanks for answering my questions.
Okay. I appreciate it. All right. Do any other commissioners have any comments or questions they wish to ask about the final report of the task force? Hearing and seeing none, let's open it up to public comment. Do we have any public comment on item number 9? Hearing and seeing none. Do we have a motion to approve sending this to the legislature and the governor?
I'll move that.
Thank you, Commissioner Cardenas. I will second. Ms. Linker.
Commissioner Baker?
Aye.
Commissioner Cardenas?
Yes.
Commissioner Wilson?
Aye.
Commissioner Wood?
Aye.
Chair Matich?
Aye.
The motion passes.
Thank you. Thank you all. And I would just want to take a moment and express my appreciation and the task force's appreciation for our staff and the tremendous work that they did on this. You know, sitting on the task force, it was fun. It was very interesting. It was great work, but really the staff is the one that, you know, put the oar in the water and made the final report what it is. So thank you to all the staff that worked on this.
Here, here. They were phenomenal.
Yeah. All right, moving to item number 10. Welcome, Ms. Hahn, our Chief of Administration, and this is our 2021-22 budget.
Good morning, Chair and Commissioner. I'm here to provide an update on our 2021 and 22 budget. As you can see, our budget are exact to the same amount that was provided from me back in the February commission meeting. The total dollar amount remained the same, and there was no changes from the January governor's budget. But I would like to note that there's only one difference than the prior year is that we are told by the governor's office that each agency are required to take a 5% operating budget reduction. And then so we did that this year, and going forward, we're also required to do it. So those are my number at the 50 million point for us, and I'm here to answer any question you might have.
Great, thank you, Ms. Hahn. Do any commissioners have questions or comments for Ms. Hahn on the budget? Hearing and seeing none, is there any public comment on item 10? Hearing and seeing none, thank you, Ms. Hahn.
Thank you.
Accept your report as submitted. Moving to item number 11, these are our committee updates, and I will make this quick. Commissioner Cardenas and I met as the Budget and Staffing Committee, and we heard the report from Ms. Hahn on our budget. Moving to item 12, our legislative update. We'll welcome to the table our Leg Counsel, Ms. Nakano.
Good morning, Mr. Chair and Commissioners. So we're in the final end of session stretch before the legislature wraps up their work for the year on September 10th. After adjournment of session on that day, the legislature goes into recess and the governor will have 1 month to sign or veto bills. Now I'll go over updates on the status of commission-sponsored and supported bills, as well as some other commission-related bills. AB 1367, the bill that would increase penalties for egregious personal use of campaign funds. It skipped past the Senate Appropriations Committee through a Senate rule that allows bills with minor costs to head straight to the floor. It's my understanding that this bill will be taken up on the Senate floor in the very near future for a vote. The bill has received bipartisan support and no opposition. AB 775, the bill that would require a person to provide affirmative consent in order to sign up for recurring campaign contributions, has become a 2-year bill, which means the bill will not move forward this year. Some concerns from stakeholders came up last minute, and the author's office determined that it would not be possible to effectively address those concerns in time for the bill to meet the applicable legislative deadlines this year. It's the author's intent to continue to work with stakeholders this fall and amend the bill early next year when the legislature returns. The bill would be amended with an urgency clause, which would make the bill effective upon signing by the governor instead of January 1st of the following year. SB 686, which would require LLCs that qualify as committees or committee sponsors to submit a statement of members with the SOS, is currently on the suspense file in the Assembly Appropriations Committee, which has a hearing this Thursday, and we will find out in that hearing if the bill makes it off of suspense and moves forward. I've also been working with the author's staff and the Secretary of State's office on some clarifying amendments requested by the SOS's office regarding some details on implementation of the bill. The bill requires the statement to be filed with the SOS, and eventually this form will be available on the CalAccess replacement system. But before that, there will be a temporary procedure for filing that statement with the SOS through other means. So these amendments will add some detail that describes how SOS will accept those forms both before and after the form is available on the new filing system. Are there any questions on the bills I've covered so far? Okay, thank you.
Well,
Sorry, Commissioner Wilson?
yes, just one, first of all, thank you for your presentation, Mr. Cano. You mentioned that SB 775 would add an urgency clause, and sometimes that raises concerns because adding an urgency requires a 2/3 vote. But could you clarify that because this bill already relates to the act, that it would not change the vote threshold?
That's exactly right. PRA bills require a 2/3 vote of the legislature, so adding the urgency clause, the vote requirement would remain the same at 2/3.
Thank you.
Thank you. Okay, I'll move on to other commission-related bills. AB 319, relating to the prohibition on foreign contributions, and which the commission voted to support, was placed on the consent file in the Senate. It has received bipartisan support and no opposition, so I expect it to pass easily. SB 459, relating to lobbying reports and issue lobbying advertisements, will be heard in the Assembly Appropriations Committee on Thursday. Commission staff adjusted our projected costs for this bill. Staff believes that the issue advertisement portion of the bill may be challenged on First Amendment grounds. Essentially, because this portion of the bill would regulate political speech, a strong government interest needs to be shown, and the solution needs to be tailored to meet that interest. Though we don't know how a court would decide, the FPPC would be responsible for defending the legislation, which of course would incur costs. So we've included those potential litigation expenses of $120,000 to $200,000 in our cost estimate. SOS also has costs for this bill, and they gave me that update. It is $387,000 in the first year and $121,000 ongoing. On to SB 752. This is the bill on electronic advertisement disclosures. This bill is currently on the suspense file in the Assembly Appropriations Committee. It will also be heard on Thursday, so we will learn at that hearing whether it will move forward as well. And that wraps up my legislative update. I'm happy to take any questions.
Thank you, Mr. Cano. Commissioner Baker?
Thank you, Mr. Cano, for the presentation and update. And this question is actually probably for Mr. Bainbridge, and that is on 775, the recurring contributions bill. We had mentioned, I can't remember which meeting, it may have been the June meeting, that if the legislature did not go forward with this bill this year, and there was great optimism that they would, that we may have the authority to not wait until after January and potentially, even February when that 2-year bill comes up, and do regulations this fall so that there is some more certainty before an election year is fully in swing. And I don't know what my colleagues' thoughts are on that, but I do welcome knowing, Mr. Bainbridge, do we have the authority to do what essentially 775 does through regulatory means?
No, we don't have the authority to prohibit these sorts of these recurring contributions. There may be some room, and we looked into this issue initially when this came up in the press and before the legislation got going. There may be some options in terms of adding some additional reporting or requiring advanced reporting of recurring contributions, something of that nature. But we don't have the authority to prohibit these sorts of contributions or penalize people for not disclosing that there would be a recurring contribution if they didn't check the box, similar to what the legislation does.
Is that the same sort of initial thoughts that you had when first inquired, either I or maybe a colleague on a fellow commissioner inquired at the commission meeting earlier this year? Has there been any change? Is that a change in what you may have understood or thought?
No, I haven't changed my opinion on it.
Okay, I didn't know if there had been any new, like this was after we took a look at it, looks like we didn't have it. My hope was that we could go forward with it as regulations, but if we don't have the statutory authority, that does make it difficult for us to do.
Yeah, I think what I'm hearing Mr. Bainbridge say pretty clearly is we can't do the same thing that 775 is doing. But I believe what Mr. Bainbridge suggested was that there may be some things around the margins that we might be able to do. Although it begs the question then, do we undertake a regulatory process to do something around the margins, knowing that the likelihood is there'll be legislation that's more on point, I think, early next year. But if you want, we can have Mr. Bainbridge come back to us next month with a little bit finer point on what those potential options could be.
I would be grateful for that, to see. Also, because when 2-year bills happen, or even if they're not 2-year bills, and legislators are looking at which one am I going to fight for, or which am I going to let go, ultimately they may choose to let it go, and then we're well into an election year where we may be able to take some action on what we all expressed some great disappointment was happening, and we may want to act before we get into an election year where we might start to change practices of campaigns. And so I would be grateful for that. I think it would be helpful for us to have, and hope perhaps it won't be necessary at all, and the legislature will go forward. If I may, Mr. Chair, my secondary question, this is for Ms. Nakano, is since we were, if I remember correctly, sponsors of 775, that will be at the table and very much so for any of the amendments or conversations that happen over the course of the fall with the authors. I'm assuming that's the case. I know you do an excellent job of that, but I always like to reiterate, if they get the benefit of our sponsorship, it's nice not to find out after when amendments have been adopted. Not a question, probably just a comment again. Thank you.
Well, I mean, Mr. Cotta, you can clarify this or not, but certainly speaking for myself, my expectation would be that certainly we would be heavily engaged on those issues as a sponsor, current sponsor. Is that correct, Ms. Nakano?
Yeah, that's correct. My plan is to continue working with the staffers and the author this fall, so that we have a strong amendment language coming into next year.
So,
Commissioner
clarification of Ms. Nakano kind of goes to one of the issues that Commissioner Baker raised. I don't have full access, to the history on this particular bill, but it passed the Assembly, correct? Or is it still in the Assembly? Because it's my understanding it was ordered to the inactive file by Senator Glazer, and if it's a quote-unquote 2-year bill, and sometimes that term is used in a very general sense, but if the bill is out of the Assembly and in the Senate, then it could be referred to as a 2-year bill, but it's not subject to the January 2-year deadline for the House of Origin. And if it's in the Senate would have until the end of August of 2022 to act on that bill. And you could answer that question at a later time. I just think that that's important to clarify in terms of any action that, or recommendations that we make on this end.
Thank you for that. I'll have to check the history because the bill originally contained different language on an entirely different subject, and it was amended to include or to replace that language with this. So I'll have to see at what point that occurred. I think it occurred in the Senate, but I'll have to double check on that.
And even if it did occur in the Senate, just for clarification, it may not be logical, but it wouldn't be subject to the January 2022 deadline, even if it's a totally different bill. But I'll defer to you to, maybe at the next meeting, you could shed some light on that.
Thank you, I appreciate that.
Commissioner Wood, did you have a comment?
I just wanted to thank staff and thank everybody. I have to hop to the next thing, but I'm glad I made it as far as I did, and we'll see you guys in a month.
All right, take care, Commissioner Wood. Thank you.
Bye-bye.
All right, Ms. Nakano, anything further in your report?
Nothing further for me.
All right. Is there any public comment on Ms. Nakano's legislative report? This is item 12 on today's agenda. All right. Thank you, Ms. Nakano.
Thank you.
Go ahead and move to item 13. These are our executive staff reports, and we begin with our Enforcement Division report. And welcome back, Assistant Chief Burton.
Thank you, Chair and Commissioners. I don't have anything in particular to highlight from this month's executive staff report. I just wanted to mention that the Enforcement Division is seeing some level of additional volume from the upcoming gubernatorial recall election, creating a bit of an uptick in our workloads. So I just wanted to point that out and thank our enforcement staff for the continued hard work that they've been doing during this current pre-election period. Otherwise, my report is as submitted.
Excellent. Thank you, Mr. Burton. Any questions for Mr. Burton on the Enforcement Division report? Hearing and seeing none. Thank you, Mr. Burton. Move next to the Legal Division report. Mr. Bainbridge.
I have a couple updates of things that have changed since we published the report that I'll go through quickly, and then I was going to discuss the issue that the League of Women Voters of California had brought up that we discussed briefly at our last meeting, and I said I'd come back and give sort of my analysis of their letter, and then we can consider maybe options going forward if there's something the Commission wants to do with that. In terms of updates, in the pending litigation section, this will be on page 8, the California State Association of Counties case, we have the briefing schedule down there at the bottom paragraph, and we just recently received an order from the court that is continuing everything, pushing it back 60 days. So the initial briefing won't be due until November. So if those were your Labor Day plans, you'll have to change it because there won't be any briefing to read. Next, looking at the potential upcoming regulations, Section E on page 10, we moved the amplification regs that we had discussed that we originally were going to be presented today due to time constraints. So those will be presented next month for pre-notice. Those are the ones that go along with the regs that Torrin Lewis presented today that were adopted. And then the behested payment reporting regs, we're recommending, they're originally planned for September for adoption. We're recommending moving those back to October for adoption so that we can adopt those at the same time we adopt the regulations concerning DAFs that Ms. Harrison talked about today. I think it's cleaner and less complicated if regs touching on the same subjects are all adopted at the same time if possible. We don't see any urgency to get them done next month, so unless I hear otherwise, our plan would be to bring those back in October along with, so that all the behested payment regs are together. And that does it for updates on regulations. I'll pause there in case there's any questions or comments regarding any of that.
All right. The commissioners have questions, comments from Mr. Bainbridge? What? Sounds good, Mr. Bainbridge.
Okay. And then with the League of Women Voters of California letter, they had written the commission a letter back in June expressing concern with the way contributions and expenditures can be reported. The specific scenario that they're concerned with is when there are multiple committees that are primarily formed to support, say, a ballot measure. And you may have a main committee, and then you may have some other more minor committees. And the minor committees may raise campaign funds, receive contributions, and then make contributions to the main committee that then produces advertisements or does some sort of expenditures in support of the ballot measure. So what they were pointing out is when you're looking at totals in this situation, it may look like a particular measure is raising more money than it is because you're essentially counting some of the money twice. When it originally comes in, it gets counted as a contribution to the smaller committee or the minor committee, and then they give that same money to the main committee, so then you're seeing that money twice. There's nothing illegal about this. This is sort of just a function of the way the campaign reporting system works, which is you report every contribution that comes in and an expenditure that goes out. I can see why if you're looking at totals, this would be confusing. So what you'd have to do is go back and track through the different statements and see where the money came from originally and essentially subtract out. If you're trying to figure out how much total money has been raised for a particular measure, you'd need to do that accounting and track what money should be removed because it would otherwise be counted twice. Our commission assistant, Sasha Linker, just recently revised the way we post information about the top 10 lists on our website so that it makes clear. There's two numbers on there if you go and look now, if you're looking for the total amount that a state committee has received, the ones that are subject to the top 10 list, so that you can see how much money they've raised in total, or the different committees have raised in total, and then it separates out basically what is double counted money and what is just the actual amount that has been raised if you're removing that double counted money. So we've gone ahead and helped out for those that file the T10s. That's a small number of committees that have to file within the state that actually have to file the T10 report, but at least for the big elections, we've tried to address this issue that they've identified where it looks like more money is being raised than is actually being raised. I think if this is something the commission is concerned about addressing in some way, we probably need to take some sort of legislative action to change the way campaign reporting takes place. One idea would be to revise the earmarking statutes. The earmarking statute requires disclosure of intermediaries, but the scenario where an earmarking has to be disclosed as an earmarked contribution is one where you have one committee who gives to a second committee with the understanding that that money will be used for a contribution to a candidate. Here what we're talking about is a committee who gives to another committee with the understanding that they will use it to make an expenditure. So they're not giving it to a candidate, they're instead, we'll give you want to do a big ad campaign, we'll give you some money so that you can do that ad campaign supporting this measure. So that is the scenario we're talking about here. That's not currently covered under the earmarking statute, which requires disclosure anytime a contribution is given to another committee with the understanding it's going to go to a candidate. The other option would be to add some reporting requirements on the reports themselves that may identify top contributors to the committee as a whole instead of just for that month. That would provide additional information for someone who goes and looks at campaign statements to know not only who gave that month, but who the top contributors to that committee are, kind of give them a snapshot of, top 2 or top 3. It would essentially serve the same purpose as the top 10 list, but the top 10 list only applies to committees that raise over $1 million. So it would capture more information for the vast majority of committees which don't raise that much money. So those are a couple options. Again, what the league is pointing out is not something that's illegal or nefarious. It's just a function of the way the reporting system works, and you have to trace the money and go back sometimes through many committees to sort of figure out if you want to get back to where the money essentially originated. Sometimes it takes some work. The last thing I would add is we're hopeful when the new CAR system goes into place, it will make this sort of tracking easier to do for someone who just wants to see where money originated that's gone through a number of committees. So we'll just keep our fingers crossed on that one.
Yeah, on that last point, in terms of, you mentioned a couple potential responses to the concerns raised in the League of Women Voters letter. The option that you raised about changing some of the forms, I mean, even if we wanted to pursue that, would SOS be in a position to be able to change those forms to facilitate the heightened reporting, or is that going to be delayed or impacted some way by the current delay in implementing CARs?
Yeah, I could say they would not be happy about that. I think they're putting a lot of their efforts into getting the new system up and running. So I think it would be it would have to make changes to the existing forms, which my understanding is that they're not making changes to that system at this point.
All right, thank you. Did you have anything further?
No, that's all I had on that.
All right. Commissioners have any questions or feedback for Mr. Bainbridge on his report? All right, thank you, Mr. Bainbridge, and let me just say thank you to Ms. Linker as well for updating and helping clarify some of that information that is up on our website on the top 10s. I think that's a good thing to do. All right, moving to our Admin and Technology Division report, Ms. Hahn.
Mr. Chair.
Oh, Commissioner Cardenas.
Mr. Chair, thank you. With apologies, I also need to leave the meeting, if I may. With best wishes to everybody next month. Again, my apologies, Mr. Chair.
All right, take care, Commissioner Cardenas. See you next month.
Take care.
All right, Ms. Hahn.
I don't have anything else to add. I would like to submit the report as is.
Thank you, Ms. Hahn. Any questions for Ms. Hahn? Hearing and seeing none. Thank you, Ms. Hahn. Last but not least, Executive Director West.
Hello. So I would just like to update the commission that the County of San Bernardino has renewed their contract with us. And so they will be continuing with us for the next 2 years on the providing legal, enforcement, and audit services. And then the other thing would be I'd like to invite our Communications Director, Jay Wairenga, to give us an update on our media for the past month.
Commissioners.
Good afternoon.
Communications Director. We had a relatively
I'm sorry. Jay Wairenga, Communications Director, Chair, Commissioners, good afternoon. Communication, that's what I'm supposed to be doing. We had an ambitious and successful month for getting our messaging out on Commission's legislative sponsored goals and legislation. The Chair and the Vice Chair wrote a couple of op-eds in major media. The first of which dealt with the recurring contribution and the checkbox issue with AB 775, sponsored by Senator Berman and Assemblymember Gonzalez. And it received prominent placement in the Sacramento Bee, which of course is one of the go-to media spots for people who follow the Capitol. But it also generated some feedback from the general public. We got feedback from the SAC-B editorial board that they received numerous comments and even some letters with public support for our concept, for the bill, for the goal that they heard about. So that was great feedback to have. The second op-ed dealt with AB 1367 from Assemblymember Lowe. It was titled, "The Penalty Should Fit the Crime," and that regards our sponsored bill to increase penalties for misuse of campaign funds, personal use, egregious use. This ran in the Bay Area News Group media group, so we received heavy coverage from the San Jose Mercury News, the East Bay Times, the whole Bay Area, and it received a good deal of coverage in those outlets. So I would just like to thank my colleague Lindsay Nakano for helping crafting some of the wording from the legislative analysis of the bills, and of course the Chair and the Vice Chair for undertaking the effort. But we got some stuff out there and it was good.
Very good. Thank you, Mr. Wairenga. Appreciate it.
Mike is going off now.
All right. Anything further, Ms. West or Mr. Wairenga? All right. Thank you for your reports. Moving now to our final item, Commissioner comments on proposed future agenda items. I think I heard Commissioner Baker requesting that Mr. Bainbridge come back the next month or at a future month to give us some feedback on what the potential alternative options are for regulatory action on recurring contributions. So we look forward to that. Any other future agenda items that we wish to flag for our staff? Hearing and seeing none. Do we have a motion to adjourn?
So moved.
All right.
Second.
Ms. Linker.
Commissioner Baker?
Aye.
Commissioner Wilson?
Aye.
Chair Matich?
Aye.
The motion passes.
All right. Thank you, everyone. Take care, and we will see you guys next month.